Hi everyone, I'm Sejal Agrawal and today we'll be breaking down three major stories shaping India right now. So in the first story we'll talk about Infosys announcing its latest share buyback and why the market isn't impressed. In the second story we look at why PhysicsWallah valuation has crashed by nearly 80 to 90%, and finally we'll cover a big government update. 26 major e-commerce platforms including Flipkart, Zepto, Swiggy, Zomato have declared that they are free from the dark patterns. So let's dive in and know about each news in detail. So the first story is about Infosys, which has launched a massive 18,000 crore rupees share buyback, the biggest in its 40-year history. And the buyback opened today, that is on 20th November, and the buyback window is only open till November 26. Infosys will purchase 10 crores fully paid up share through the tender offer route at a fixed price of rupee 1800 per share. And this represents about 2.4% of the company's total equity. Now, the acceptance ratios have also been announced for the retail shareholders holding shares worth up to 2 lakh rupees, and the company will accept 2 shares for every 11 held. While in the general category, the ratio is 17 for every 706 shares. But the most interesting part is that promoters, including Nandan Nilkani and Sudha Murthy, have chosen not to participate. Now, promoters hold 13.05% of the company, and when promoters skip a buyback, acceptance ratios for retail investors usually improve because the total pool of the tendered shares reduces. And this is why analysts believe small shareholders have the best chance of benefiting. And now let's talk about why Infosys is doing this now. So this is Infosys' fifth buyback. Each one has been a part of its capital return strategy. The first buyback was in 2017. It was around 13,000 crore rupees at 1,150 rupees per share. Second in 2019 at around 8,260 crores, and third in 2021, fourth in 2022 to 23, and this one was through the open market route. And the current buyback is not only the largest, but it became at a time when Infosys performance is showing a clear recovery. Infosys posted 13.2% year-on-year jump in net profit in Q2 FY26, and revenues grew 8.6% to 44,490 crore rupees. Operating margin remained steady at 21%, and the company announced $3.1 billion in total contract value, of which 67% were the net new deals, which is a very strong signal in a slow global environment. On top of that, Infosys added over 8,000 employees in this quarter alone, and because of the deal momentum, the company upgraded its FY26 revenue guidance to 2 to 3% from 1 to 3% earlier. So the buyback is clearly coming at a time when the cash flows are strong, order pipeline is healthy, and the balance sheet is comfortable. But here is the real twist, and this twist is actually the biggest reasons why investors are confused. So until recently, buybacks were tax-free for investors, for shareholders. Not anymore. Under the new law, the entire buyback profit is treated as income from other sources, which is fully taxed at your slab rate. And here is the problem. Your purchase cost is not deducted, which means the cost of acquisition becomes a capital loss. But that capital loss can only be set off against capital gains and not the buyback income. So if you are in the 30% slab, your effective earning from the buyback premium shrinks sharply. And for some investors which are selling directly in the open market and paying 12.5% LTCG or 20% STCG, they might actually be more tax efficient. So the answer to should you tender completely depends on your tax slab rate, your holding period, and whether you qualify for the retail category. Small shareholders will likely benefit, but high income investors, they need to be careful. So do not just tender because 1800 rupees seems really attractive. Run the tax numbers first. Now, in the second story, we have PhysicsWallah, the hyped Edtech unicorn that debut at a strong premium, which is now facing one of the steepest post listing corrections we have seen in the recent times. So the stock listed at 145 rupee, which is a 33% premium over the IPO price of 109 rupee. It jumped to 156.49 rupee on day one, giving investors an early 44% gain. But the sentiment flipped almost immediately. On day two, the stock dropped around 11% intraday and closed 8% lower at 143.28 rupee. Now on day three, that is 20th November, yesterday, the stock once again remained volatile. After the early session weakness seen during the day, the stock eventually stabilized and closed at just minus 0.39% for the session. And following the mild decline, PhysicsWallah market cap now stands at 42,037 rupees crores, which is a recovery from yesterday's panic driven lows but still below day one peak. Now, this means that while the early correction remains sharp, the total wealth erosion is now lower than the initially feared 7,000 crores, thanks to the today's recovery for intraday low. So, why is this happening? Analysts say that this valuation at listing left very little room for the disappointment, and the edtech sector is intensely competitive. Unacademy, Byju's, Ellen, and several regional offline coaching chains are fighting for the same student base. And regulatory scrutiny also remains high, especially in areas like advertising claims, refund policy, learning outcome, and subscription transparency. So another big challenge for the company is also the profitability, because edtech platforms attract millions of free users, but converting them into paying customers requires heavy marketing spends and continuous product investment. And because of this, many analysts recommend investors to book partial profits after the listing pop or maintain a strict stop loss near to 130 rupees to protect the gains in case volatility continue. But despite the volatility, PhysicsWallah remains a major force in Indian edtech. What began as a single YouTube channel in 2016 has now become one of the India's largest hybrid education network. In 2025, the company posted 49% revenue growth. Losses narrowed drastically from 1,131 crores to 243 crores, which is a sharp turnaround. However, even after the correction, PhysicsWallah's valuation remained above of the several peers. Upgrad is valued at around $2.25 billion and Unacademy at $3.44 billion, both lower than the peak valuation PhysicsWallah commanded on the listing day. And the market loves fast growing tech companies, but it becomes extremely cautious when valuations surge faster than the fundamentals. And the last three sessions are a perfect reflection of that: high excitement on day one, quick profit booking on day two, and volatility on day three, where the stock finally settled with only a minor decline with wild intraday moves. And now let's move to our third and last story for today, which is that the government has announced that 26 major e-commerce platforms including Flipkart, Myntra, Zepto, Meesho, Make My Trip, and several others have officially submitted self-declaration letters confirming that they no longer use dark patterns on their websites or apps. So basically, this is important because dark patterns are those manipulative designs, tricks that push the users into actions do not fully intend to do, like false urgency, dripping hidden charges at checkout, subscription traps, confirm shaming, belt and switch tactics, disguised ads, and many others. Now, last year, the government banned 13 types of dark patterns under the guidelines for prevention and regulation of dark patterns issued on 30th November 2023. Now, the Ministry of Consumer Affairs said that all the 26 platforms completed internal audits or hired third party auditors to review their user interface design, and they have reportedly removed all the elements that could mislead or pressurize consumers. Now, the government has called this an industry best practice and encouraged all other digital platforms, including app developers, marketplaces, fintech players, to follow the same path. Now, the regulator, the CCPA, has earlier given companies 3 months to comply and warned of the strict action against violators. They had also made it clear that they will continue monitoring websites, apps for deceptive design. The full list of complaint platforms include some of the biggest names in retail, grocery, travel, healthcare, fashion, and food delivery, from Flipkart, Ajio, Big Basket, JioMart, to Swiggy, Zomato, Blinkit, Hamleys, Pharmacy, Ixigo, ClearTrip, Reliance Digital, others. Now, this move is expected to significantly improve transparency, and consumer trust in India's fast growing digital commerce ecosystem. Now, for the government, it shows that strict regulation and business growth can go hand in hand. For consumers, it means fewer tricks, fewer surprise charges, and much more clarity while they are shopping online. So that's a wrap for today's video. On one hand, we covered Infosys news. The record breaking buyback shows rising confidence in deal wins, profit growth, cash flow improve. But tax rules mean investors must evaluate. On the other hand, we covered PhysicsWallah massive post listing crash, which shows how quickly sentiments can flip. And finally, India's crackdown on dark pattern marks a big step towards a cleaner, more transparent digital marketplace. And let me know in the comment section what do you think about today's stories. Do like, share, and subscribe our video. See you tomorrow with another episode of Daily Market Rundown.